My name is Kinneri. I'm from Quantra, and I'm going to be your host for today's webinar. Uh, Obviously, I would like to thank all of you for joining in today. And just to give you a brief about Quantra, we're a group of traders, coders, and analysts who love to teach and share their experience. We are also part of India's one of the largest high frequency trading firms, which is iRage. iRage and Quantinity were founded by technocrats with a passion for financial markets, which I'm sure is very evident through the product offerings that we have. Quantinity has helped over 100,000 learners across the globe through its education initiatives. And today's webinar is really important for us and very special to us because this is another step that we're taking towards Quantra's mission to bridge the gap between theory and practice in algorithmic trading that you'll see today. Uh, which will be taken by Ishan, obviously. So to give you a brief about Ishan leads the content and the research team at Quantra by Quantinity. Prior to that, he worked with Barclays and the global markets team and with the Bank of America Merrill Lynch. He has a rich experience in financial markets spanning across various asset classes in different roles. Most of the courses that you do see on Quantra are spearheaded by Ishan, so you can thank him for all the amazing content. And obviously, you guys have already answered the poll, so I'm going to pass on the mic to Ishan. Just to reinstate, if you do have any questions after the webinar, please feel free to ask them using the questions box, which is on your GoToWebinar widget. And I'd like to welcome Ishan to please take over the presenter rights.
Yeah, so thank you, Kinneri, for a kind introduction. Very good evening to everyone, or good morning and good afternoon, based on the geography in which you are located. And I'm very happy to have this workshop with you all, and hoping that I make most of your time, which you're going to spend with me. Okay, so there's a session which is we'll first learn how you can add more systematic approach through machine learning, and we'll not stop at that. We'll see how you can actually automate the entire trading and remove the emotional bias and all the negative of the manual trading in your trading journey, right? So let's get started. Okay, so these are the couple of outcomes which you can expect after this workshop is how machine learning can help you in trading. For those who are not familiar with this concept, so I'll ensure that it is covered in a very simple and easy to understand manner, so that even if you are not familiar, you can able to understand what I am trying to say, and then go back and brush up your concepts in more depth later on. And not only that, we'll also see how we can backtest the machine learning strategy, and at the same time, how can we do live trading or paper trading on it. To summarize, we'll start with what is machine learning. Create a simple strategy on S&P 500. We'll modify this and implement the strategy in live markets and analyze the performance in live markets. So how does it all work in real markets, right? So that's the most important part, which is kept at the end. Okay, but before that, just a quick understanding or just quick experience sharing of what I hear from the people, or what do people say about stocks, right? So this is a stock where I have intentionally not kept the name of the stock here, but this is one of the most favorite stocks which is talked about, and it is also evident from the shareholding pattern which was seen in this stock. So over a period of time, the retail shareholding for this stock has increased over a period of time, right? So let me take you back to June of 2019. So this was a stock, and just to Uh, I do see some kind of excitement in the chat box. So someone is saying Apple. So this is not Apple. This is one of the banking stock in say Indian markets. It was one of the very good banks in terms of showing the fundamentals of the companies. Before this period was very good in terms of earning growth and revenue growth. And this stock was around 280 in 2019 April, and it has fallen to 2019 June, right? It has fallen to 140 rupees. And at this point, what do people generally say is this is a very good stock. It has fallen to 140 rupees. It cannot go lower than this, right? So everyone piled up on it. So including my very close friends, they actually bought this stock around 200, hoping that it will go back to 300 and they will make 50% from it, right? And that was the typical stock. And yes, you guys have got it right. So this is diamonds forever stock. And as you can see, typically, a very unexpected thing happened. I think very few would have envisaged like the stock can go to say 15 rupees, but uh, what I've seen is majority of them would have bought this stock and the hope that it cannot go any lower than this, right? So these are all grandma stories which we hear about this. A stock which falls, it cannot go lower than this, and people tend to believe in this without any back testing, without any evidence in the market, and they jump into this stock, right? So I'm very happy that most of you got the name of the stocks right, name of this stock right. But the idea is, if you have experienced this, you will understand what I'm trying to say is there is a lot of emotional bias which goes into a trading decision, right? And which is very difficult to remove from manual trading, right? So if you are looking at a stock price, say like a Yes Bank, day in, day out, and if you haven't seen levels like 15 rupees in your life, then it's very difficult to comprehend that the stock can go to 15 rupees. And whenever it falls from say 280 to 200, you are tempted to buy that stock, right? And eventually you actually lose in this kind of a stock. And someone might say we cannot short this stock, so we cannot make money if I'm already aware of that. So yes, in Indian markets, it's very difficult to short. So only available opportunity is through futures or maybe through SLB arrangement where you lend the stock, you borrow the stock from someone who is ready to lend it to you and go short on it. But this is not the end of the story. Let me take another example. Again, the stock prices for you to guess. And this is actually the split adjusted price. So it will be very difficult to guess. But let us understand this. So this is one of the stock. You see a sharp rise in the price in before the COVID, right? So COVID hit us in 2020 Feb or end of the Feb, and just before that, this stock was actually zooming. Okay, just ignore the price because this is split adjusted price, but you can see the movement in the stock price, right? Like from 60 to 120 in a very short period of time. So the stock almost doubled in a very short period of time, and most of them were saying P is abnormally high. This stock has doubled in 3 to 4 months. How much high it can go, right? So yeah, so again, emotional bias, again the human judgment comes into the picture, and they fail to capture what was there in the store for them after this. So the stock price is above $800 right now. And this is not just I'm making up some stories. So you can even go and check the tweets of Elon Musk, and just go to a period where he said, I'm going to buy back this stock, right? I am going to make my stock private. So that was a time where majority of them were shorting Tesla, right? Because they haven't seen such a high rise in Tesla, and they were very tempted. Okay, stock price cannot rise like this, and they were very tempted to short it. And that's where Elon Musk come in and said, I will take my company private at $400, and from there on, I think this stock hasn't stopped from there on, right? So. So idea of this is not to promote momentum trading strategy, but the idea of this is there is a lot of human bias which is there in our trading decisions when we are actually trading. manually, right? And momentum is one of the styles which, if you are following that in a systematic fashion, you would have been able to catch this trends, right? But we are not here to understand that. We are here to see how we can bring more systematic approach to our trading, right? So instead of saying, okay, next time when Tesla rises, I will buy it, rather than creating such kind of a mental framework just by looking at a small period of data, what we can do is we can incorporate a machine learning approach or a systematic approach to trading. By machine learning, uh, for those who want a perfect definition, so this is a definition which I have taken from Wikipedia. So essentially, what it tries to say is it's a machine or a computer with some kind of an intelligence. So if you pass the historical data to this machine, it would try to identify the patterns, or it would try to identify the signals where you should have bought or where you should have shorted the stock, and leave it up to the machine to figure out the patterns, right? So for example, I just showed you the example of two stocks, which is Yes Bank and Tesla. But these are just two stocks. But if you all want to trade in say 10 stocks or even 100 stocks, it is very difficult for you to comprehend the patterns, understand which technical indicators work on a particular stock, and so on and so forth. So it's very difficult to devise a very tailored strategy for each and every stock and each and every instrument which are present in this financial markets, right? So to uncover that pattern, what we can do is we can pass all the data which is available to the machine learning algorithm. Let the machine learning algorithm figure out the pattern, the right levels to buy and sell a stock, and we just rely on that. Definitely, based on the performance of the algo, we just rely on that and make our trading decisions, right? So let me explain you through a flow diagram, right? So we have a machine learning algorithm. Let's say this is a machine learning algorithm with all the smartness, all the intelligence, artificial intelligence, which is there. And first, we have to, for us as a trainer or as a programmer, we have to decide what is the outcome which we want from this machine learning algorithm, right? So a typical outcome is, okay, machine learning algorithm, tell me when to buy a stock, right? So in case of Tesla, this will give me the points where I should buy the Tesla stock, right? And not only that, also tell me when should I exit a particular position. Okay, so that is when to sell the stocks, right? So these are very simplistic outcome which we can define from this machine learning algorithm. It can be very complex in the sense I can also ask what will the price of Tesla stock after a month or on a specific date. I can have a more divisions, more bifurcation, right? How when to buy 10 quantities, when to increase my quantities to 20, 30, so on and so forth, and when to reduce my quantities, right? So the levels of classification, this is typically known as classification. So we are having a binary classification, which is binary stands for two. So buy stands for two. So binary classification is in this case is buy and sell. So we can also have multi-class classification. So multi means many. So you can have many levels of not only telling us when to buy, but also telling us how much quantity of the particular stock we should buy, right? But for simplicity, let us restrict ourselves to only binary classification right now. And now comes what should be there on the left hand side of the machine learning, or what should we feed to the machine learning algorithm. So typically we should feed to the machine learning algorithm whatever we think are important for the algorithm or for the machine to make the right decision of when to buy and when to sell, right? So typically what I have observed is most of them use prices, right? Historical prices. They have this mindset of historical prices and some kind of a labels, right? So if Nifty is at 12,000 and if it crosses that, then they think, okay, now they have made a sufficient breakout or something, right? So one thing is we can pass the historical prices. Other is we can pass the technical indicators, right? We can pass RSI, we can pass moving averages, we can pass any technical indicators or any candlestick patterns which you have in mind, right? Someone will look at the shooting star or so on and so forth. Whatever you think can be useful for the machine to make the right choices of trading decisions of buy to sell should be passed to the machine learning algorithms. And for those who are very much into this markets, can also play around with the fundamental data, such as revenue, earnings, sentiment data, what people are saying on Twitter, and so on and so forth. Combine all this, pass to the machine learning algorithm, and let machine learning algorithm find out the pattern that, for example, whenever RSI is greater than 70, that is when you should buy. Let the machine learning algo figure that out, and we should listen to machine learning algorithm if based on the accuracy, right? So, so very simple example, we should not blindly trust anything, right? So we'll first evaluate the accuracy of the machine learning algorithm. So that is typically we'll observe the performance of the machine learning algorithm on an unseen data, or the data which algo has not seen. And in that particular data, if the machine learning algorithm is right, say 80% of time, for example, 80% of time, if machine learning algorithm says buy and next day the price indeed goes up, then that is a trustworthy algorithm. I can trust my hard-earned money with such an algorithm. And next time, whenever the machine learning algorithm will say buy, I will go ahead and buy in the stock markets, either manually or through algorithmic route. It is through automated trading. Right? So that's what we'll be saying now. Any questions so far? Can time be one of the features in fundamental data? So, Ritesh, I think that's a very good question. So, in fact, as a matter of fact, we also use time as a feature for machine learning algorithm, because we have seen in the markets, like there are a lot of calendar anomalies, right? So, if you just Google and search for some research papers, you will find this very famous research papers on calendar anomalies, which is sell in May and go away, which is essentially saying the market actually typically falls after the month of the May. So, it is prudent to sell your holdings in the month of May. There is this Christmas effects, there is holiday effects, there is January effects. So there are a lot of well-known effects which are well documented, well researched, and some of them still exist in the market, right? So you can also pass the time as a feature to the machine learning algorithm. Right. So there is also another interesting question. So with the shortage of time, I'll be just picking and choosing some of the questions, and for other questions I think they will be answered personally to you, either during the session or after this session, right? So when I said 80% of accuracy, right, so that essentially means whenever I said whenever the machine learning algorithm says buy and the stock price goes up next day, if that happens 80% of the times, out of 80 times out of 100 times, then that is the accuracy, right? That does not mean how much profit I'm making per trade, right? So it can very well happen that in the remaining 20%, I just lose say 50%, which is much more than the profit which I have made individually in each of the 80 trades which I have taken, right? So we'll also look at that in this session of how to actually compute the strategy returns, which is the profit factor, which is the profit per trade. Okay, and for rest of the questions, just hold on. We'll have a Q&A to discuss in detail, but let me quickly check if anything is specific to this concept. I'll just definitely answer it right now. Okay, so I just quickly went through. So there are a lot of questions on the what kind of data which we can use through, right? So typically, the choice of the data is completely up to you, but I'll just give you some key thought process of what kind of data you can pass through. You can pass through all the data which you think has some kind of a predictive power to forecast the future price movements, right? So if you're trading in Tesla and you know Elon Musk is active on Twitter, and that does have an impact on the Tesla stock prices, right? So in that case, you can include the sentiments data, corporate news data, and all other stuff to forecast more accurately the Tesla stock price, right? And that might not be true for a small cap stock in an India, which does not have any kind of a media presence, which promoters does not have any kind of a social media presence, right? So you will hardly find any mention of such companies in the social media. So in such cases, passing a sentiment data to your machine learning algorithm will not be any helpful, right? So always keep this in mind. All the data which makes sense for machine learning to more accurately forecast the future price movements should be passed to the machine learning algorithm. Okay, and let's take an example so that I think you'll have more clarity. So I'll be referring to the example which you can see on my screen. So the link of the notebook is on my screen. So it's one of the course on Quantra. And Kinnari, if you can also post this link in the chat box to everyone, I think it will be very helpful. They can also follow me along with coding.
Yes, of course. I'll just do that right now.
Okay. So that particular link will take you to this page. So I'll wait for a minute so that you can open this on your own end. Okay. So let us start. Um, So now we'll approach this machine learning from left to right. So first what we'll do is we'll define the features, right? What should be the features for this machine learning algorithm? This is a very simplistic example which I am taking, but please feel free after this webinar is over to actually enhance and enrich this features as you deem fit, right? So very first step in actually designing and creating any algorithm is importing the libraries which you'll be working with. If you're not aware like which are libraries will be required, you can also import on need basis, right? But some of the libraries which are often used are NumPy, Pandas for data manipulation, data reading, Matplotlib for plotting and visualization, and sklearn is very popular in Python for importing machine learning specific libraries, right? Either it can be algorithms or it can be for computing the matrices. So let me import this libraries. You can run this cell by pressing Shift plus Enter. So it will run the cell and take you to the next cell. Then we already will be working on predicting or forecasting the S&P 500 directions, whether to buy or not to buy or to sell. So the data is available here in a CSV file. So we are reading that. Now comes the most interesting part, which is defining the features. So here, for illustration purpose, what we are taken is the difference of open and close and high and low as two features which will go inside this model, machine learning model for now. So as you can see, these two features are defined and you can see on the screen. And the next step is to define the output. So here it is the output is buy and sell, but there are a lot of long only investors. So what I've done is I've defined if the close price for the next day, which is close dot shift of -1. So whenever I say shift of -1, it goes to the next cell. So whenever the close of the next day is greater than the close of the current day, as you can see the greater than sign, what I've done is I've set the signal to 1. 1 typically indicates buy and 0 indicates no position, right? You can modify this to 1 and -1 to indicate buy and sell, buy or sell. So this is how I have defined the target variable or what is the expectation from the machine learning algorithm, right? So as discussed, this is a binary classification which we'll be working with. Okay. Now what we'll do is we'll split the data, right? So remember I told you want to trust your hard-earned money on this machine learning algorithm. So you just cannot give it as it is. So what you'll do is you'll essentially divide the data into two parts. One part of data you'll allow the machine learning to figure out the patterns, to learn when to buy and when to sell. And when it's ready with the learning part, the second part you'll use to check the accuracy of the algorithm, right? How well are you performing on the data which is not seen to you, right? So very layman explanation of this is the training set can be considered as the classroom where teacher is coming and teaching. So in this, the machine learning algorithm is figuring out on himself of if I do this, what is the outcome? And once that training phase is over, he is put into some kind of a live projects like not told like he's put on a job and he's using his knowledge which he has learned in the classroom to make the predictions and will be judging whether those predictions are right or wrong, right? So those are the two data sets which are here. So essentially we'll call the fit method. Fit is basically where the machine learning will figure out the patterns on a training data set. That's why you can see the train uh, suffix after the word x and y. X are my features, y is the output variables. So x is the features, which is this yellow box, and y is this green and the red box. So CLS is the machine learning algorithm, right? So this blue box, which you can see, is the CLS, which is the classification, stands for that. I am using SVC, which is support vector classifier. There are tons of algorithm. We'll not be going into discussion of which algorithms are good and which are bad, but you'll find the link for top 10 machine learning algorithms in these slides later on. But now, for now, let's say there is some X algorithm, uh, X machine learning algorithm, which is used, which is currently learning from the training data set, and that whatever he has learned, whatever the machine learning algorithm has learned, is stored in the CLS variable. Okay. Now comes the interesting part, which is we'll say CLS, which is machine learning algorithm. Whatever you are done is on the training data set. Now, why don't you do the same thing on a testing data set, which is the unseen data set, which you haven't seen right now? Tell me what should I do, whether I should buy or don't buy, and I will actually compare with the actually what has happened during that period of time, right? So that is my Y test. So Y test is actually if the stock price has gone up, then it will say buy. And CLS.predict is basically what is machine learning telling me. If machine learning also tells me buy, then that is a perfect hit. Machine learning is accurate about that particular day. If actually it was buy and machine learning is telling sell, so machine learning was wrong on that day, and that is a miss on the machine learning part, right? So as you can see on my screen, the accuracy numbers are for train it is 86%. So when the data is available, that is 86%. But on the unseen data, machine learning algorithm is right 64% of time, right? And someone has rightly pointed out, being right does not mean that you are profitable, because some few small, large negative trades can wipe out your portfolio, right? So now let us see if we follow this guidance of machine learning algorithm and trade according to that, how would have my strategy perform, right? So what I'll do is I'll store whatever the machine learning algorithm is telling me in the predicted signal, and I'll compute the return. So return is nothing but the change of the price from today to tomorrow. If today is 100, tomorrow is 102. So the percentage change for me is 2%. And strategy returns is simply the return, which is 2% into what has machine learning algorithm told me. If it is buy, which is 1, I'll simply multiply by the 2%, and that is my gain. If machine learning algorithm is saying don't do anything, then in that case it is 0. So 0 into 2 will be 0. So that is how my strategy returns are. And as you can see on my screen, on the unseen data, this is how my strategy would have performed. So it would have performed giving me approximately 33% returns during this time, right? Now, this is just a sample strategy. This should not be used as it is, right? So, few things which you can work in the strategies, defining more features so that machine learning algorithm is more accurately able to understand the patterns, right? So one of the things which I can do is introduce a technical indicator. So one of the very famous technical indicator which is widely used is RSI, right? So I'll compute the RSI over the closing price for a period of last 14 days and also add RSI to this bucket. Okay, so now RSI is part of the features. Rest of the things remain as it is. And what I will do is I'll first train the machine learning algorithm and then see how the performance goes, right? So by adding RSI to the feature list, what is happening is the train accuracy is increasing beyond exceptions, right? 99%, which is very close to 100%. Maximum you can get is 100%, right? Which is right each and every time, right? But the test accuracy has reduced. So this is an important thing which I like to highlight to everyone, and which is one of the most missed aspect of this whole process is overfitting, right? So the machine learning overlearned in the training data set, and when unseen data came, it was actually failed miserably. So previously it was 64%, and now it has gone down to 60%, right? So this is you can think machine learning algorithm is not able to adjust or correctly decipher the nuances or pattern in the financial market data, right? So this is a short recipe of disaster, and overfitting should definitely be avoided, right? So you can play around with this. I am not going in very detail of how to add features and remove features, but this is a playground for you as a quant analyst, quant researcher, for you to devise, think about features which can add value to your machine learning algorithm, add them and see whether they are effective in any adding incremental alpha to your strategy or not, right? So let's say you went through this whole process, and now you are very satisfied with the performance of this strategy, right? Now you think, okay, this machine learning algorithm is worthy of my money, right? So what you'll do is you will continue your journey in the Contra course. So in the Contra course, you learned about the strategy. You'll continue your journey. You'll learn about different things. And what we have is for you is a ready-made template. So whatever you have learned in terms of strategy, you can just click here, and this will open a new window for you. And this window is essentially giving you a template for you to connect to the broker and live trade your strategy. So by live trade typically means that you can simply connect the strategy to your broker. So whenever the signals are generated like a buy, an automated order is generated, which is buy order, and it is placed with your broker. So there is no manual intervention. That is the right way to think about it. In Indian markets, it's actually there is a not clear-cut regulation of how you can do that. So there is also one-click execution facility which is available here. So whenever the algorithm will generate a buy signal, you get a notification that the algorithm has generated a buy order. You simply click a single button and the buy order gets placed. But in the foreign markets like US, Europe, there is no such restrictions. So you can completely automate the order placements also, right? So so as you are noticed, like whenever I click this button, this is one of the unit within the course. Whenever I click on this button, a new window opens up, and this is the same strategy which we have seen right now, but in a slightly event-driven format. So let me quickly explain you what things have changed. So we are using zipline here. So there are new methods which are coming, which is the order method and schedule method. So order method, as the name says, will enable you to place order to your broker, and schedule method will enable you when to call the logic method, right? There are various securities which are available. So FB stands for is the ticker for Facebook. If you want, you can change to say Amazon, and that should be fine. It will fetch the data for Amazon, and you can play with that. These are various parameters, same as what we have seen in the notebook. And this data.history is used to fetch the data. In the notebook, what we have done is we have used the CSV file, but in this, you can get the data in a real-time basis. These are the same features which we have computed, which is open and close and high minus low. If you think you have changed some features, for example, let's say I changed and normalize this feature. So let's say divide by close, then you can also do here whatever changes which you have done in the notebook while finalizing the algorithm. Similar changes you can also do here. So let's say I'm normalizing my features, like that is not only taking the difference but also dividing by the close and normalizing the features. So that you can do here. And this is the same thing. We are calling the SVC method and fit to it, and creating this algorithm and computing the accuracy. And if the accuracy is greater than 50%, which indicates that there is not fluke, there is some kind of understanding which machine learning has developed over a period of time. If that is true, then only whatever the machine learning algorithm is telling me, if it is telling me that it is one in sense it is buy, then what I'll do is I'll place the order with the broker through this method. So this method takes which instrument I want to buy or sell, and one indicates that 100% of my portfolio should be allocated to this particular security. Don't worry if you are not able to understand this methods, like what is this and so on and so forth. You can refer to the section before this, which is live trading on blue shift, and each and every method is discussed in detail. But for now, for understanding, this is a method which will place order for that particular security whenever my machine learning algorithm will tell me buy. This is the automated execution piece. So if you just use a notebook, it will tell you buy. You manually have to open your broker account and place the buy order. But by using this, all the execution will be seamless. It will be in a automated fashion, right? And since we have changed the asset, you might want to check out how the performance would have been. So what you can do is you can select the data set. Let's say I select NYSE minute. You can select the start date. So going back too much is not helpful. So let's say start from 2017 and up to 11th Jan 2021, which is up to yesterday. Right? So by clicking on run, it will initiate a backtest, and we can see the performance from 2017 to now on. And this matrices are updated as and when the backtest is progressing. So as you can see, it's generating a return of say 40-50%. And I think more than returns, I think it is important to look at the Sharpe ratio, because anyone can increase the returns by increasing the leverage, but that person cannot increase the Sharpe ratio. So Sharpe ratio becomes the key matrices to evaluate. And also note the algorithm is not trading, which you are seeing are flat lines. And this is due to the fact that we have imposed the condition that the accuracy has to be greater than 50%. So if that is not the case, we will not be trading in the market. And that's why you are seeing this flat lines, right? So once you think, okay, this is decent enough, a Sharpe ratio of 0.8. By the way, that's not decent enough, but let's assume that we got a good Sharpe ratio by you worked on this algorithm, put in a lot of efforts, and created a very good strategy. And let's say you got a decent Sharpe ratio. Now there is a time where you can take it live. You just click on here, which is go live, and you can accept and execute. There are some changes which are done. And now there are these 5 steps which you have to fill in. For example, if you want to perform any kind of changes in risk management, you can go to settings and specify if drawdown is 25%, shut 50%, shut my algorithm. What is the order limit? What is the size limit? You can specify. Next is you have to select the broker. So you can click on add broker. So currently Blueshift supports 3 broker for live trading. Master Trust is for India, Alpaca is for US markets, and FXM is for FX markets, right? And there are also 2 brokers which allows for paper trading. So you can select one which is supporting you. Let's say I selected Alpaca, and then specify the capital which you want to deploy. Let's say I specified $10,000 on this strategy. Now you have to specify the mode. So remember I discussed in India there is no clear-cut regulation, so you can go on the one-click side. But in US markets, you can automatically or algorithmically place the orders. So in that case, you can select auto execution, which is it will not ask for any kind of a manual intervention. You can read the terms and conditions which are there. and click on accept. You can review the various parameters which are set and then click on confirm. So this my some strategies actually running in the backend, so that's why you can see the PNL. But if you are running this for the very first time, the PNL will be 0, and you will see this kind of a screen which will confirm that the algorithm has started the execution, in the sense fetching the trade data, connecting to the broker, so on and so forth. So there is this process which is happening in the backend. And once everything is done and the markets are open, you can see the trades in the trade logs, and you can come to the console. If you want to see the code, you can see the code which is used in this strategy creation, and all the running algorithms which are available here. So for example, if you want to do a more further analysis of this, so you can see, and you can see how the so good part about this is completely running on cloud, so you don't have to worry about any kind of a installation or setup on your local machine, and ensuring that there is internet connectivity at your place and so on and so forth. Everything is running on cloud, so all those aspects are taken care of, and you can analyze the position. So currently this algorithm has a position in the currency pair of euro USD. This is the quantity, what was the price, and this is the mark to market profit which is there on this trade. But overall in the day you can see $50 of a loss, and there are various analytics. If you want to see a very detailed analytics, you can download it and see and analyze in detail. You can also place some kind of a code, so that it gives you some kind of an intimation of when the order was triggered and so on and so forth. And if you don't want to do that, then you can also come here. This will give you the complete trade logs of when the buy order was there, when the sell order was there, at which time frame that was triggered, and what is the status, whether it is partially filled or completely filled. And overall, I think you can have all your strategies here. You can stop the strategy any point in time. If you think I should stop this, you just click on stop, and this strategy will be stopped. The inactive strategies can be seen here, which you have stopped, and you can also archive your strategy. And overall, this is a very good way in analyzing this and learning whether your strategy is working fine or not. And one of the most key benefit which I get by doing paper trading is that if there is any kind of a look ahead bias, which is very easy, right? Which is very easy to introduce in your strategy, gets caught immediately in a paper trading, right? In paper trading, you cannot have look ahead bias, right? You get the data as it is, it gets processed, and the signals are generated, and the trades are actually triggered, right? So if I want to compare, so the notebook is on a scale, say low, in terms of closer to reality. Paper trading is much closer to the reality, and live trading is the actual reality, right? So that is how it is. So once you do any backtesting of your strategy in notebook, you should do paper trading for based on the frequency of your strategy, how frequently it trades. Based on that, you have to decide the period for paper trading, and only then you should go for live trading. So yeah, so coming back to this, so so this is how you approach this problem. As I said, that we have used support vector classifier, but you can experiment with all these algorithms. There's a link available, so you can go and read in detail about this. And how Quantra can help you is initially to backtest and optimize your strategy in a notebook and an easy to understand manner. Then you can do paper trading, so that you learn from the real market executions and have a seamless live trading that does not require any kind of installation or downloads. And you can jumpstart your algo trading journey. And I will actually now ask Kinnari to take it over from here.
Hi, Ishan. Thank you so much. This was a great run through to what we have on the platform and how our learners can benefit from it. We're really overwhelmed with the response that we've received for our new feature, which is the live trading integration, which Ishan took us through really nicely. It is always motivating to see how the users benefit from the courses and how they can actually implement it. Because by the end of it, we really at Quantra believe that it has to be an end-to-end learning that we provide you. And as our mission statement says, to bridge the gap between theory and practice in algorithmic trading. So, having said that, as we have one such learner with us, Mr. Vignesh, who I would like to welcome and see if he would like to speak about his experience and how he's someone who's used this feature, and you can see his testimonial right here, and he's the used the live trading unit and had a great experience. So I want to welcome him to see if he would like to share his thoughts and ideas with us. Hi, Mr. Vignesh. So would you like to talk about your journey, or if you're comfortable, then do a screen share to show how you've used your learning and matched it with the implementation?
Yeah, sure, of course.
Great, over to you.
Is my screen visible?
We can see your screen.
Okay. Yeah.
So you want to tell us which course have you taken, or which one are you talking about?
Yeah. Actually, I have taken some machine learning courses, machine learning, and also some, deep neural network and reinforcement learnings. And as actually, I have completed my theory part out of all these courses. And I'm recently, after the blue shift activation came, I started implementing few of my strategies here. And I could have some promising outcomes. If you can see, maybe this is one of my backtesting results. Using it's using it's a machine learning strategy. I think I have done for some few of the stocks. So I got some promising results, and I'm trying to implement my reinforcement learning and neural networks, which I haven't done yet. And one thing I wanted to still ask is that I still not done some paper trading yet. Paper trade. This is all till only my back testing results. So I'm not done paper trading. Um, I'm not sure whether that has came yet using for Indian market, because I had done this testing for Indian market. So because last time I checked, it was still on process, I think. So once it is done, I think I can do that as well.
Okay, that is great to hear. Thank you so much, Vignesh. And we hope to see you try more strategies, and hope you achieve your alpha strategy. Uh,
Thank you.
we'll be taking more questions now. I would like to see if anyone has any more questions that we can help answer. We have Ishan with here, who will be more than happy to answer all the questions that you have related to the strategy, machine learning, and the integration that we've just seen. Ishan, we have a question that says advice to the new ones, the beginners.
I think that's a very relevant question, which is what should be the advice, right? So, what I will advise is actually spend sufficient time before you actually jump into deploying your own money. So, please do get a hang on the features, what can be used, hang on how the machine learning algorithms work, and what how to set the best target variables, right? So a very simple example is people use non-stationary features for training a machine learning algorithm, right? So that is a sure short way, because machine learning algorithms are designed to be working only with a stationary price series, stationary inputs, right? So such and such, there are a lot of things, right? So you have to incorporate commissions, transaction costs, slippages. You also should be familiar with the market nuances, right? So if there is some unexpected event which is happening, like a earnings announcement, so the stocks can behave weirdly. So on and so forth. So not necessarily you have to go through each and every cycle. So typically in investing, people say you have to see at least 2 to 3 bear cycles so that you can become a savvy investor. So that is not the case here, but you can use the historical data and make yourself peace with all those experiences which you should get. But at the same time, do spend time in understanding the data, whether the data is of good quality or not. Read good books, do some good courses, join some good seminars, webinars where you can get insights from a trader. Read a lot of research papers. So there are a lot of research papers which are available on, say, SSRN, and then use all your knowledge to design the impeccable or the most lucid strategy, and that should be the right journey for you to follow.
Thank you, Shan. We have a follow-up question to that, which is if you have zero experience to coding, where do you start?
Okay, so that's a very common thing. So I'll say you are not alone, but there are a lot of people who will find common between you and them. So essentially, if you don't have coding, that is not a showstopper for you, because essentially there's a three things, which is statistics, financial market, and coding, right? So you need to understand that you need not be a coder who can get recruited at Google or Facebook. You should not be that much proficient, but you should be little bit proficient where you are able to generate trading signals and evaluate the performance of that, right? So for that, I think the good way to start is with a Python language, because of all the languages which are available like C, C++, R. Python is the most easiest language because the syntax looks very much closer to the English language, and there's plethora of support which is available on Stack Overflow and various forums, right? If you get stuck. So go to any website which teaches Python. If you're interested in Python specific for trading, we have a course on Quantra, which is Python for Trading Basic. It's a free course. Enroll now, learn about it, practice, 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 and get to a level where you can actually are able to backtest your strategies and also live trade your strategies.
Thank you, Shan. We have a question for Mr. Vignesh, which is which can we know the specific course that Vignesh sir has taken?
Yeah, actually, I have taken machine learning courses and also neural networks in Quantra.
Thank you so much. Another question that we have is someone missed the first half of the webinar or missed out the in between of the webinar. We will be sharing the recorded version of the webinar tomorrow itself. So I think within the next 24 hours, you'll have that in your inbox. So don't worry, please. Uh, Another question, Ishan, that we have is just 1 minute. People who know Python and are already working as a data analyst or data scientist, which course is perfect among all the ones that are offered by Quantra?
Sorry, can you come again? Like which?
If you already have existing knowledge of Python and data, and if you're already working as a data scientist or a data analyst, which courses are great to get started with as the next step? Let's say you already know Python, then what would you
Yeah.
suggest if someone wants to
Okay.
get started with algo trading?
Right, got it. Thanks for the question. If you are, so that depends on which area you want to go, right? So if you want to leverage the power of machine learning and AI, so you can go to a advanced machine learning learning track, which we have on Contra. So in that we have courses like neural network and reinforcement learning and its application in trading. So that would be a good set of courses for you. And if you want to consider a non machine learning kind of a courses, so you can consider the advanced strategies learning track. So it has courses from industry experts like short selling, which is from Laurent. There is event driven trading strategy, which is from Conpedia, and other collaboratory course on that learning track. So that will give you the right mix of strategies such as short selling, mean reversion, momentum to add to your trading arsenal.
Okay. Thank you, Shan. We have one by Bill. In your opinion, do the crypto markets present too much volatility for common machine learning approaches? And I'm talking specifically of only the high volume currencies such as ETH, BTC, etc.
Okay, so thanks, Bill, for your question, and thanks for coming to this webinar. So yeah, that's actually the talk of the town, right? How to trade the Bitcoins, right? It has seen the rally which we haven't seen in the past, and a lot of them are questioning whether this rally is sustainable. Is there any economic value to that? So keeping aside all those things, there is indeed a volatility. So what I've seen is at the start of January, the Bitcoin has fallen by 17% in a day, right? So how to handle such kind of a volatility, right? That's the question. So a best way to approach is if you go with some kind of a statistical arbitrage or a pairs trading strategy. So and you do find some kind of a co-integration between the pairs. So then you can actually work out a strategy which can work even in this volatile environment, because essentially you will be going say long on Bitcoin at the same time you'll be also going short on another cryptocurrency.
Okay. Thank you so much, Ashan. Uh, we have another question. How do we get data for Indian markets for creating strategies and signals?
So, okay, so thanks, Tanuj, for that question. So, for Indian markets, as a if you're just starting up, so you can use Yahoo Finance to get a free data on Indian markets, but that will be of a daily frequency. So you'll get a close to close price kind of a data. Once you get familiar, once you get hang of the con concepts, and you really want to take it to next level, that's where you'll require a higher frequency data, which is like a minute level data or even lower than that. So you can go to Condal or GDFL to get the data. But once you have set up, you can also reach out to your broker and ask them to provide a real-time feed to you so that you can actually paper trade your strategy and also live trade your strategy.
Okay.
Uh, I think Kinai, there's one interesting question which says, what is the minimum age to learn algo trading? So, so that's a very interesting question. I hope I was introduced to algo trading much earlier in my life. But I think there is no age per se. I think all that is required is enthusiasm. So, if I'm not wrong, in our another program, which is EPAT, we have teenagers also who are learning this. So learning is also important, right? It's not always you need to do live trading, but learning these concepts, learning statistics, and getting used to it, and having fun trading in markets through algorithmic route is also the good part about all these things.
Great. Thank you, Shan. Uh, I think there are a lot of questions. You can go ahead and pick any that we have a lot coming in. Which course or book suggestion which is good for derivatives trading in Indian markets?
Uh, so uh, So derivatives, if you want to understand the concepts, then I just recommend the cliched book, which is by John C. Hull. So you can refer to the options and derivatives book by John C. Hull. That's a cliched book which will help you understand the concepts of options trading, right? But if you are looking for con trading strategies on options, then we have two set of courses with in collaboration with NSC Academy. So those should be the right choices of course which you can learn. And those courses, you can learn what are Greeks, how does it relate to the markets, what kind of volatility trading strategies you can have, how to trade forward volatility, how to trade during, say, uh, this earnings or during the budget days, and so on and so forth. So, by the way, budget is coming soon, so you can devise your strategy according to that.
Okay, thank you. Shreya. Are machine learning strategies applicable only for high frequency trades or also for low frequency delivery based trades? This is by Saurabh.
So that's an interesting question, and it's a myth that only high frequency traders use algo trading or machine learning. In fact, what I've seen is I just had a word with a good fund manager. He's like based out of Amsterdam. So what he does is he applies machine learning for investing decisions, right? So machine learning is not a solo approach, like it is either machine learning or no machine learning, but machine learning should be thought as a collaborative approach. So you already have some set of rules in place. So if you are a fundamental investor, you already have some set of parameters in place. Along with that, you also deploy a machine learning algorithm, which will give you the probability of when you should buy in the market, right? And that machine learning algorithm can take a lot of data, right? So, for example, if you want to buy Avenue Supermarket, which is the parent company of DMart, which is into this, right, in this brick and mortar grocery stores. So you can take the earnings, the profit growth. By the way, Avenue Supermarket has given good profit growth. Its earnings were announced a couple of days back. But not only that, you can also have some kind of a alternative data which gets feed into this machine learning model, which is what is the footsteps which is observed, what is the uh, volume, like the number of bill cuts and so on and so forth. So all those things combined together can be feed to machine learning algorithm, and it can also give you the long-term decisions whether you should buy this particular stock or you should refrain from buying that particular stock.
Okay, thank you. There's one question which is related to Blue Shift and the what would be the cost involved in dealing with any of these brokers when you're live trading?
Yeah, so there is no cost per se in accessing Blue Shift and say starting your trading your strategies in live markets. But there is a cost which will be incurred, which will be charged by the broker. So, for example, if you're trading in Indian markets, so you'll be charged the brokerage fees, the STT, which is the tax, and other stamp duty and other stuff whenever you are trading in the markets. But there is no cost as per se in accessing the Blue Shift platform.
Okay. I have one very interesting question which I've come across for a lot, which is always on the lines of someone who wants to get started, is that I'm a full-time trader in the markets, but I still trade in the traditional way, the manual way. Please share some insights how and by when retail traders can implement ML, AI, etc.
Um, okay. So retail, I think you should not differentiate, like retails are also a powerful set of plots, right? So retail can use machine learning in a most effective way, and there should not be any stopping from using any ML or AI algorithm. So I'm actually not able to understand the questions clearly, but if you follow a more structured approach in understanding all the nuances, like right from getting the right set of data, choosing the right algorithms and features, and also designing the target variable in right fashion. So you can, as a retail, also get the advantage of applying the machine learning in the markets, right? And as you can see, Blue Shift is available for free, so there is no hurdle which was there previously, right? So all this setup, like this kind of trading software setup, one-click execution capabilities requires a lot of investments for the firms, right? But for you, through Blue Shift, all those costs are not involved, right? So for you as a retail, there is no distinction compared to an institutional investor. I hope that answers your question.
Yes, yes, I think it does. One question we have from an EPAT alumni, or maybe someone who's currently pursuing EPAT. I'm currently in the EPAT batch and want to get ahead, and I'm already reading Eve's AI book. Can you recommend a combination of books and things I could do to keep me on top?
Yeah, so I think this is a good book to get started with, but you can also refer to the Marcus Lopez de Prado book on financial machine learning. So, what I like about that book is it does not talk about the algorithms, right? It does not talk about use random forest, use neural networks, but it touches upon the different aspects of the machine learning, right? How to design the features, how to design the target variables, how to do the cross validation and other stuff. So that should be the right kind of a book for you to be at the top of the game. And apart from that, if you want to get familiarity with the algorithms, so you can refer to the Ernie Chen book on machine learning.
Okay. What is the share of HFT trading in Indian markets?
So there is no, I think, official stats which are available. So I don't think so. I'll be able to comment on that. But just curious to know. So irrespective of the market share of high frequency trading, they are here in for a different purpose, right? So they trade at a very high frequency with a tick by tick data. But if your strategies are on a low frequency, that does not put you to a disadvantage, even if that has a lower market share, right? The key thing which you should get from automated execution is to remove the manual intervention, remove the human biases such as emotional and other stuff from your trading approach.
Okay, thank you so much. We have another question by Manish, which says, say we're using a little, a little me sophisticated ML code. Say we're using a little sophisticated ML code with price data and couple of technical indicators, which shuffle through three different time frames, and the universe is underlying FNO stocks for Indian markets. What is the time lag to compute and come up with the signal in Python for this universe, for the
Yes.
sophisticated algorithm?
So I think it's difficult to comment. It's not about only about Python. It's also about the infrastructure, like the underlying configuration of the computer which you have. But I think it should be anywhere. It also depends on how you've written the code. But irrespective of that, based on my experience of similar strategy in Python, so the indicators were computed in less than a minute uh, for the uh, for the 50 stocks. For the Nifty stocks, FNO will have more number of stocks. So if I extrapolate, it should be, say, less than a 3 minutes of a time to compute this everything and give you the signals and place the order, right? So if your trading frequency is say less than sorry greater than 3 minutes, it should not be a problem for you.
Okay, thank you. We have a nice differentiating question. What is important, fundamental analysis or technical analysis?
Oh, that's an age-old debate. I don't want to get into that. But rather than thinking of this two as a two separate regimes and you have to choose one, what I have done and I'm very happy and satisfied with that is taking both of them in my trading strategy. So I also use the fundamental data and technical data and the price data to give me a more refined trading signal. And I guess there was one more guy who I met. Yeah, his name was Atul Suri. So he was actually working with Rakesh Junjunwala previously, right? So he has also incorporated both the approaches, like technical analysis and fundamental analysis, and giving the signals, right? So it's not wrong. It's not, I can say, opposite approaches, but they are complementary approaches. And I hope, Alan, I hope you like this answer, right? This was not, this was more realistic. Yeah.
Thank you so much. Uh, do you want to cover more questions? I think the time is pretty much up. If you're okay with it, I think we can take a question or two more.
Yeah, I think we can take last two questions, and what we can ask is we can ask them to actually reach out to us if they need more clarification, and we'll be happy to
Yes, I'll
answer.
actually be sharing the Quantra, so you can connect with us on WhatsApp or you can connect with the email ID. So I'll share that in the chat. And for any course related queries, um, technical queries, you can post on our community. So I'll be sharing all of these links and you'll also receive those on email. Now, coming to the last two questions, I think we have, just give me a moment. Is it good? Okay. Which time frame we will be working on, hourly, daily, or weekly? I think this is in reference to the strategy you showed on Blue Shift. I'm assuming.
Right. So time frame. So which okay, if your question is which strategy I have worked with in the demo or the sample which I've shown. So in the notebook, it was even in the live trading part, it was on the daily frequency, right? So once in a day, I will go and check for the signals and place the orders and come back the next day. But if your question is which strategy you should be working with, so that's a subjective question. But ideally, a minute level kind of a data should be sufficient in designing a good strategy, and it need not be, the trading frequency need not be minute level. So use minute level data, but the trading frequency depends on the end objective, right? So some guys were some people in this conference were asking me, can I use this for long term investing? So if that is the case, so you'll be hardly trading once in a quarter or once in 6 months. But again, you can use minute level data to give you the refined signals, to give you more accurate signals. But the trading frequency will be low. At the same time, if you're intraday trader and will be getting in and out within a day, then that should also be sufficient. So first identify the role or the strategy style, trading style which you're comfortable with. Are you an intraday trader or a couple of days trader or a weekly trader, or are you a long-term investor?
Okay, thank you, Ishan. We have one question which is related to the Blue Shift feature. Is there option integration as well?
In Blue Shift, so currently you cannot backtest your strategy, option trading strategies, because we don't have the data. But in Blue Shift, you can write your code and straight away go live, because if that particular security is available with the broker, that order will get placed with the broker. But in Blue Shift, you cannot backtest your option trading strategies, but you can live trade without backtesting, which is risky. But since you asked, as a matter of clarification, I'm saying that. But please do note, it is very risky to directly live trade a strategy without backtesting.
Thank you, Ishan, for that and the TNC that came along with the answer. With that, we will end this webinar. I would like to
Yeah,
thank you so much, Ishan,
yeah.
for
Thanks
taking out
everyone.
the time, and thank you all for participating. Let me remind you once again that we have recorded today's webinar and we'll be sharing the link in the next 24 hours. If you have any queries about the course of the webinar, you can connect with us on quantra@quantinst.com. And thank you so much, Vignesh, for your special appearance. Have a great day, and thank you everyone for joining.
Thank you, and please do take good care of yourself, and see you in the next webinar. Bye bye.